Hi, I'm Jonathan Treussard, and welcome to Treussard Talks, where we talk about the mechanics of investing, the psychology of investing, and what it means to manage your wealth with purpose. Because understanding your wealth shouldn't be as complex as building it. Welcome to today's show. Dave Nadig, it's such a pleasure to have you on the show.
Oh my gosh, it's so great to be here, John.
I think of you as possibly one of the top 3 people in terms of depth of thinking when it comes to asset management and what this whole business is about. And I'll tell you who else is on the list so that you're clear on the pantheon. I think of you as being in the same company as Jason Zweig and Matt Levine.
Well, I will take third place to those two any day of the week. Holy cow. Thank you very much. It's very kind of you to say.
Well, I mean it. So I guess we're just going to go deep and start deep and stay deep, because what choice do we have anyway? Given how deeply you think about asset management, I think it's helpful to frame it within the context of the much bigger picture of what this is all about, which is the engine of capitalism. And as I think about that, once upon a time, maybe 400 or 500 years ago, there was a pivot point where, because of technology, it made sense to pool resources to do bigger things together. And honestly, when I think about the word company, it kind of tells you everything, that this is about doing things as a communal effort. And now, when you think about the power of investing, we started by investing in companies. And then further down the line, things like mutual funds and ETFs were invented. So take me back to the beginning. And how do you think about the power of capitalism, the power of pooling resources to do big things together?
Yeah, I'd go much further back. I mean, pretty much as soon as we stopped being hunter-gatherer societies, although I would argue even in hunting, that is probably the place where you can point to human activity and say, that is when humans expressed their superpower, right? The human superpower is collective action and collective cognition. That's what we do that no other species does as well as we do. And so when you get a hunting party together and you start dividing roles and responsibilities and who's flushing and who's throwing and who's running, that's the beginning of building an economy, right? Because the whole point of an economy is recognizing that not everybody does everything and not everybody consumes everything. Some level of specialization matters. And if you think about every step along the way of our economic journey as a species, from hunter-gatherers to agrarian cultures to the development of money, et cetera, they all served to forward this idea of collective action and collective cognition. And so when I think about like what's wrong in the world today, and I'm trying to trace that back, I try to go back to this first principle of the point of capitalism is for the species to allocate resources effectively for species level flourishing. Like at a genetic level, that's why humans developed money and markets and capitalism and all of these resource sharing structures. And it's not that capitalism is the only one of those structures. I have a dear friend who's an anthropologist who spent years living on an island studying the food sharing processes of native whale hunters. And they have an entirely vigorous economy, none of which involves money or capitalism, right? But, you know, the guys who go out on the boat who get the whale have certain descriptions of how they will divide that up amongst certain people in the village based on a rule set, some of which is spoken and some of which is unspoken. It's not that dissimilar to what we do in American tax policy. It really isn't. We've just chosen to intermediate all those activities through 2 big inventions, one of which is the rule of law, and the other one is the rule of capital, the development of money and how it flows. And so whenever I'm looking at the world and feeling like things are in chaos, I try to go back to those points. How are we doing on the rule of law? How are we doing on the rule of capital? And I think we could argue both of those are in a little bit of trouble at the moment, or at least in a bit of transition. But when you start thinking about, okay, well, what do we do as investors? What do we think about? I come back to those 2 things. Do you believe that the structure and the way you're doing things is correct and accurate and will be defended by your community, i.e. the country, the legal system? And in terms of where you're putting your capital, does it make sense? Can you draw that line from, I put $1 million into X and I see how it becomes more money because I'm supporting species level human flourishing? And if you can't draw that line, you're probably just entertaining yourself.
Yeah, you're off the deep end. I love that. It reminds me of work that my father-in-law, Tzvi Bodhi, and a number of colleagues did in the 90s on the functions of the financial system, right? It was a functional perspective on the economy. But the whole point, of course, is there are fundamental functions, right? Things like moving value through time, storage of value, a number of these things. And then we get to decide as a society how to achieve these functions. But to your point, they're fairly universal. And in the best of cases, the structure that we adopt is consistent with some version of optimizing, some version of delivering. I love the term you just used in terms of species level human flourishing, right? If we don't do that, if we're not trying to promote good outcomes for us as a people, as a species, then we're off the deep end. So that makes a huge amount of sense to me. And you're right, it goes back much further than the invention of modern capitalism. But if you do fast forward, right, and let's just fast forward, forget, going back 500 years, let's go back 50 years, because I do want to talk about asset management, which is something that you're so deeply steeped in. Not so long ago, we had stocks, we had bonds, and then if you had any degree of involvement with this machine, you maybe were intermediated through someone who was your stockbroker, and they would pitch you stocks and so on and so forth. And then somewhere along the way, perhaps out of enlightenment, the concept of a mutual fund came up, the concept of communal investing in that sense came up. Can you kind of take me to that evolution?
Yeah, I want to go further back to do that, though, because I think it's important to point out the foundational structure of fund investing, which is, what pretty much everybody does, goes back to the 1400s. Right? I mean, this is Adrian von Katwijk and the Dutch East India Company literally pooling exploration bonds to minimize the risk that one expedition would get tanked and you'd lose all your money, which was happening all the time. Everybody, give me $1 million to go to somewhere and discover a new trade route, and
the
ship
new
goes
world
under and your family is the new world, and then your fortune's gone. And so the first mutual fund, which incidentally I think charged 40 basis points, so we haven't made that much progress, was just pooling these bonds together to minimize risk and also to create a security that you could then go sell, so that I could participate in 45 different expeditions where before I couldn't have afforded to or have access to one. Fast forward all the way to the now. Seems like we're dealing with a lot of those same problems, right? That was fundamentally a private to public markets problem. We then did nothing with that structure largely until 1940, right? When we had the Massachusetts Investment Company and those very early mutual funds, which again were largely ignored by most people until the 1970s. I started my career in the late 80s. Even then, while there was an individual investor world, the average human in the United States did not invest in the market at all. The median middle-class human in 1983 had zero exposure to the equity markets. They might have had a pension. They might have had something that relied on equity markets for the promises that they had, but they didn't have that direct exposure. It was almost like a hobby, or you were very rich. You probably just had a broker that you trusted, or maybe you had somebody managing a trust for you if you were extraordinarily wealthy. And the shift towards really thinking about this at the individual level, I'm going to have a portfolio, I'm going to invest in a basket of stocks, or I'm going to go pick the dogs of the Dow. That's really kind of an 80s, early 90s phenomenon when you started to see that become the aha moment. I point to one very simple, obvious explanation. Access to information was impossible. I mean, when I started, my first trade I think I made was in 1985. I was probably, which would have made me 18. And it was so unbelievably arcane. I had to go to the library and pull down Investor Business Daily reports and look at individual stocks and learn how to draw point and figure charts. And I mean, it was like learning Morse code. It was not an easy thing to do. It was a thing you did because you were drawn to it or because you were genuinely just trying to make bank. And I think that shift, with the rise of the internet, with the rise of a lot of the early personal investor services companies, which I put Vanguard in, even though they were primarily an investment manager, certainly at that era in the 80s. But you talk about things like the Motley Fool, right? These very early internet-based ways of distributing information. I remember you would get these giant binders full of stock information, and that's what you had to wade through. So I think technology just wiped all that clean. Like, that's my sense, is that we had this phase shift at the end of the 80s and the early 90s when information started to become free, access started getting easier. And, that's led us to what I think is now the opposite problem, whereas we probably have too much access. We have too much product. We have too much information versus call it 1990, we had the opposite. We had no access, we had no information, and we had gates.
Yeah, I think that's right. Just across the entire arc, this is about technology, right? It has been about human technology all along. Everything from the technology of doing things in the real world to the technology needed to actually consume information. And again, going back to this concept of a functional economy, you're absolutely right. In a DB world, in a defined benefit world where you had a pension and it served the purpose of having some kind of pool of capital that was going to back you up in retirement, when it was outsourced, that function had been fulfilled. You were all good, which honestly, in a lot of ways, seems functionally more efficient, shall we call it, versus to having a bunch of individuals who just don't have the specialized knowledge being told, hey, here's an account, here's a bunch of funds, have at it, which again, kind of maybe where, in some weird way, the devil crept in and where the business of asset management, a door opened.
Yeah, I've been thinking about this a lot in generational contexts, right? Because we do see some of these cycles repeat. I just did an interview with Neil Howe on this topic. And one of the things that has stuck in my head is if you look at the rise of the individual investor market, which is kind of what we're talking about, the democratization of investing, to overuse an overused phrase, that really happened by and for and to Gen X.
Yeah.
Right? We were the ones in 1990 that were 20-something years old. We were the latchkey kids, and we had zero trust in any institution on the planet, right? That was our role as a generation, was to say, screw signing up for 45 years to work for a company. I'm going to go start my own, right? That's a very Gen X kind of thing to do. This sort of distrustful, self-absorbed, and also somewhat distrustful even of themselves.
Where do you think that came from?
I think some of it comes from literally how, as a generation, we were raised. The whole latchkey kid thing is legit. I never saw my parents after school. I walked home and I was on my own until I heard the dinner bell. And I think that a lot of people in their 50s and 60s now, down to maybe their late 40s, that's a pretty common experience. We were a fairly ignored generation. And as such, when presented with the opportunity to allocate into our own 401k or our own IRA, make our own decisions about what stocks we want, why, yes, I will take the brokerage window. Check. And we were the generation that really started doing that. And then ironically, millennials then swept in with indexing, right? Millennials are the generation that have adopted target date funds most aggressively, that have adopted passive investing, because there's kind of a community risk model in the millennial community that doesn't exist with Gen Xers. We're kind of jerks in Gen X. We're really in it for ourselves.
My wife literally has pictures of her with like a dirty shoelace with a key dangling from her.
With the key on it.
Right, no, totally. And I think there is a feral quality, and I was raised it the same way, where my parents both worked, and I would get home, I would be alone until some version of 8 p.m. most days. Mm-hmm. And I think you're right. That creates a degree of self-reliance.
Yeah, I'm not complaining.
No, yeah, but I do want to explore, and maybe you want to explore a little bit more what you're describing as distrust in the institutions, because to me, it doesn't draw linearly from being left alone, as opposed to there's something about distrust, which is a reaction to an experience.
Yeah, look, I don't want to paint an entire generation, although that's certainly what demographers do for a living. I think if you look at what Gen X got, the big gift for most Gen Xers was the 90s. We had this window of extraordinary technological advancement, incredible capital flows, lower interest rates, a pro-business economy. Like, it was a legitimately great time to be early career.
The magic of Internet 1.0.
Yeah.
I wish we could go back in a lot of ways to what the internet once was. Of course, that's an impractical wish.
Yeah, but we were wizards, right? I mean, if you were 20 something in the early 90s and you were remotely technically oriented, and particularly if you were technically and money oriented, and those were things that you studied, it was like the folks right now who have AI by the you know what's, right?
Totally.
Who can just do everything with AI very quickly, code things up, launch an app tomorrow. If you're that facile with the tool set, you get a boost up. If you were facile with money and the core internet technologies, frankly, core computing technologies in the 90s, you got that leg up given those opportunities. But the flip side of that is 9/11, George Bush's ownership society. I mean, we could go through a long litany of stuff that Gen X has been through to have proven to us again that nobody was coming to save us until we ended up in the 2000s where we sort of invented the Fed put and decided that we were taking markets all the way to becoming a public utility. So it was oddly this move from the sort of collectivism of join a company, defined benefit, 30-year career that really dominated the 50s and 60s sort of industrial complex into a much more individualistic, higher growth, higher speed, entrepreneurial focus for most of Gen X people's lives. And now we came out of these sort of cascading crises of the early 2000s, having decided to effectively replace what used to be the company put with the Fed put, and decided we're going to socialize risk in that way. And I think Gen X is very untrusting of that. And I think that's very appropriate. If you look at most of the financial nihilism behavior, the actual money flowing into things like polymarket, day trading products, crypto, sports betting, while we talk about the problem of that being 21-year-old dudes, the actual money, it's all us. It's all Gen X that's spending all that money.
So I think we hit it. And that's exactly where the distrust component comes in. To me, as I look back on, let's just call it the last 25 years, though again, it maybe it's 30 years, but 25 for sure. There's a whole generation of people who were told time and time again, here is the thing you do, and if you do it, it'll be good for you, right? I mean, I think of the people that got fleeced in the tech bubble as being, kind of first in line for that kind of experience. And we look back now and we laugh about the fact that, of course, the stock market is, N times bigger than it was then, and the losses don't feel so big with the benefit of hindsight. But of course, people literally got destroyed on an individual basis.
I mean, my fund in 2000, 2001, my fund was down 90%.
Right.
I was running a fully invested tech fund. It was a disaster.
And people lost their pensions. People lost their jobs. I mean, that's the whole reality. So it's like, hey, trust us with the stock market. We got this, right? And then to your point about the ownership society, I was a student of bubbles in the early 2000s as Earl Thompson and I were trying to make sense of that seems like odd behavior. And it did seem manipulative on a higher level basis. And the ownership society was the next thing, right? Which is, hey, if you buy into the American dream, if you buy a home, this is it, or you're on your way. And of course, what happens? The great financial crisis, the mortgage crisis, people getting evicted left and right, so on and so forth. And we continue down this path, in my view, of highly redistributive events where there is a population that loses in a big way. Mm-hmm. And you come out of this thing and you're saying, the losing is too much for us to handle. So that's where you come up with the Fed put and all of that kind of societal, let's socialize risk because every time around we get fleeced otherwise. And of course, this massive distrust component, right?
Right. I think we've seen that now. Obviously, that is evident in markets. We can point to that in all sorts of places. But obviously, it's what's behind populism and politics we're seeing around the world, too. Right? It's no accident that we've turned the flashlight of distrust in institutions onto our governments themselves, down to the level of the courts and the laws. And we're talking about the rule of law and rule of capital. We've changed a lot about the rule of capital and what we don't trust about markets, but now we're applying that to our foundational systems. And so it doesn't surprise me that we are going through this kind of tumultuous renegotiation of the contract with America. Now, I may not like the way it's going or how we're doing it, but I'm not surprised that it's happened.
I completely agree. I mean, I just gave a talk about understanding tariffs. And
you must be so tired.
Well, I mean, these are things I've known for 20 years that I never thought would be relevant, right? So here we are. And the short version of it is there is a scenario where tariffs make sense. It's a scenario that doesn't apply to us as a nation because we're the United States of America, but there's a scenario where you're a weak nation with a small army, and you keep saying, hey, when people import stuff, they make us more susceptible to, invasion, because someone around the corner is like, hey, that's a bunch of cool stuff they have. Let's go get it, right? So it made a lot of sense as we came out of the Cold War that as we were promoting free trade, a lot of smaller countries with weak armies would say like, nah, we don't like it. And of course, the great trade we made then was we had all this excess military capacity because we had just won the Cold War. And we said, all right, well, you have a defense externality problem. As you lower tariffs, we're going to basically be the cop for the world. And so again, like, however we're renegotiating this now and whether we're going about it correctly or incorrectly is irrelevant. When you put it in the context of like, oh, this is the bigger picture, at least you're a little less confused.
Yeah. And, I know you wanted to keep this, at least with the lens of we are investors in the actual world today in the now. I think it makes it extraordinarily challenging to make long-term bets right now. My take, and I'd love to get your take on this, my take is the only bet that feels even like rational is to bet with the house. I can't peg which country is going to win this reshuffling. I can't peg which industry, but I can bet on the fact that it seems really unlikely we allow the S&P 500 to go down 50% and stay there for a long time, But I mean, do you agree with that? Or do you think that there are pockets here where you can make a called shot?
I think it's incredibly hard, obviously. And I think what you're saying where I am fully aligned is, I guess, let me just kind of take a couple of vectors. The first vector is for all of our challenges and flaws and issues, to the extent that we continue to be an ownership society, we all want this to eventually work out. So you have to believe in this concept of we're not just going to like blow it up and be like, oh, that was nice, let's go back to the Stone Age. Is not giving up on the longer arc of wanting things to work out because, well, that's kind of the evolutionary pressure in us. The shorter version of it, the shorter range version of it, which I think is what you're saying is, well, the people in charge, and there's always going to be an elite class who are like the real bosses, right? And they shift and they vary, but there is an established class. And to the extent that those people, and this is a big if, right? Because we know that markets have been moving from public market to private markets and so on and so forth. But to the extent that the elite class is vested in the public equity market in the US, then let's just call it what it is. like, yeah, co-investing with the oligarchs doesn't seem like a bad place to start.
Yeah, that's a great way of putting it. We're co-investing with the oligarchy. And, I may want to hold my nose by doing that, but I'm also a fairly rational person. But it also, to me, that the fact that we're both saying that, like, oh, yeah, I pretty much got to bet with the house, also explains sports betting. Because if what we're saying is we have no agency on those big things, that like the best that we're going to do is throw it in a target date fund or the S&P 500, or maybe we get a little exciting, but mostly we're going to end up looking like everybody else anyway, then where do we get to express individual agency? Where do we get to have that opportunity to generate significant wealth, step function family wealth? And the historical answer, of course, has always been go start a business. That's part of what I love about the American dream is that for certainly my entire life and for most of American history, that's been a great answer, right? Go start a business, be successful, work your ass off, find a niche. You will have made generational wealth one way or the other, whether you sell it or just hand it off to your kids. I'm feeling less and less like that's true in the current environment. Certainly right now when we're facing a lot of small business turmoil, it seems like a real rough time to start a new business and develop generational wealth. So what do you say to somebody who's sitting at your desk who's 30 years old and is smart, but doesn't have a $400,000 a year job? They've got a $95,000 a year job.
Yeah, I'll push back a little bit on the idea that this has been a very hard time to start anything for a number of years. And part of it is like the economy continues to change, but that's just the nature of evolution. I mean, anybody who's been on the ground floor of the intersection of technology and globalization over the last 20 years has done extraordinarily well. So I think there have been pockets. And so one of those things is like, I think it's helpful to be tracking along, let's just call it a secular trend, right? Because you can be really, really smart at something. But if you're really, really smart at something, and by the way, you've got the wind in your back, that's a pretty good place to be. Now, and again, this is where it's hard to have these conversations without bringing the political sphere into this. And we have been in this era of discontent for now, certainly a decade. And this goes back to this distrusting. One of the concepts of starting a business particularly, and again, I'm someone who chose America as my nation in adulthood. Part of it is you could show up, you could build a business if you play by the rules and if you're hardworking and maybe a little smart, good things would happen. And a huge part of that is a sense of stability around things like the rule of law, but also just, people like to talk about low regulatory burden and all this other stuff. But really fundamentally, we're talking about consistency of regulatory behavior and just knowing what the environment is going to look like. And some people will claim, hey, like during COVID, you really screwed the small businesses with, all these restrictions and this and that and the other thing. By the same token that I would argue perhaps a slightly different class of people today would say, hey, these tariffs are really getting in the way of like when we thought we had a business here. So I think, yes, the ground has been shifting a lot and very rapidly if you're a small business owner in America over the last 5-10 years. But maybe that's always been the case.
Yeah. I mean, look, you didn't want to launch a business in 2006 and then be like, hey, 2009, woo. Like, totally. I mean, the world is always ending. And I think there's a lot of truth to that, which is why, I think my foundational investment ethos has always been just put it in and forget it, right? I had a conversation with Jack Bogle 20 years ago, which stuck in my head, which is boring and forgetful. He said, boring and forgetful is the best thing to be. That's one of the great advantages of indexing is you can just forget about it. And that's worked out generally okay for me as an investor over the years, but that's very different than the personal capital that's involved in starting a business. Like what you're doing right now, running a small practice, you need to have a certain amount of regulatory clarity. I mean, back when we were arguing about regulation best interest over and over again and the fiduciary standard, like when that stuff's rolling through the financial advisor community because we can't decide what the rules are, it makes your life harder. Right? You have to make all sorts of weird choices. You have to have different conversations. You have to file different paperwork, whatever it is. Stability is what you really need to be a strong entrepreneur. You need to understand where you can stand so that you can disrupt something over there. That's the whole point of being an entrepreneur.
Thanks for listening. I'm Jonathan Treussard, founder of Treussard Capital Management. I hope you're enjoying this episode. If you'd like to start receiving my free newsletter, Wealth Empowered, or if you'd like to learn more about me and Treussard Capital Management, go to Treussard.com. That's TREUSSARD.com. Thanks, and enjoy the rest of the episode. So you've used the term now a couple of times, which I think is worth revisiting, the term agency. And I think agency is a central part of this concept of personal flourishing, right? Mm-hmm. There is agency in starting your own business. There is agency in a lot of things that one can do in life. And weirdly, I think when we say things like, and this is shorthand, obviously, but kind of invest with the house or co-invest with the oligarchs, it does remove a degree of agency where you're saying, I'm just going to put it over there. I'm not going to think too hard about it. I'm along for the ride, which fundamentally is a kind of relinquishing some degree of...
Oh, it feels like acknowledging defeat. I'll go further, right? To me, as somebody who has sat on a trading desk for years, making calls about whether to buy Celera Genomics now or in 20 minutes, right?
Yeah.
That's agency, right? Like that's giant piles of other people's money that you're going to either be successful with or very sad about. That's real agency. And I never want to go do that again. But that kind of agency, I think, shows up in the financial planning process. In my own relationship with my own financial advisor, I had to have that conversation where I was like, look, I just need a little money on the side because at some point I'm going to be panicky about something and I want to be able to throw some money away on puts. And I'm knowing full well that that's probably what it would be, but I needed to have some small, tiny little pot of money. It's like less than 1% of my portfolio, where I can just do stupid things because it gives me that sense of agency and I acknowledge that I'm paying for it with the entire value of that part of my portfolio. Like its expected return is minus 100%. And I think that creating those pockets of agency in an anti-agentic world is really important. And I think it's less relevant in markets to some extent because I actually think a lot of personal agency in markets is mostly a bad thing right now.
Right.
And the average investor is not doing well by day trading triple leverage microstrategy. So that kind of agency is bad. And then you turn and look at, okay, well, let's talk about corporate America and employment and all that stuff. And I got 25-year-old kids. You talk about lack of agency. Most of those kids are just like, well, what's the point? I've got AI taking all the jobs. We're downsizing stuff. We're laying off all of the sort of mid-tier middle class work. There's a lot of lack of agency in that part of the world too. So again, completely understandable you're seeing increasing personal risk-taking in other places like sports betting.
Yeah. And again, what you were saying about, hey, I just need to be able to say that I did something, right? So I'm going to buy some puts. As a matter of risk hedging, you're barely scratching the surface, but hey, you did something and it's taking some of the pressure off psychologically, right? So that's a huge part of why you're doing that. It's exerting your agency as a quote unquote smart investor, as opposed to perhaps what other people would be doing, which is exerting their sense of agency by doing what I would argue are kind of self-defeating things, whether it's, triple levered ETFs. We should talk about that or sports betting. But before we get to that, one of the things where you've really forced me to think long and hard about the concept of agency is the concept of a hyper agent and a hyper agent class, particularly in the context of crypto. Take me back to that place because it's one of those like, once you see it, you can't unsee it type of thing. And it leaves me, and I'm being very transparent, in a crisis of faith type of thing.
Oh, I believe so completely. I talked to a friend this morning who runs an investment management firm and has hundreds of millions of dollars stuck away somewhere, who said to me very candidly, every time I see Bitcoin make an all-time high, I want to jump off a cliff. And he's got an allocation, like he's not stupid. He has some small chunk like in his global portfolio. So it's not like he's not profiting at all or that he's somehow betting against it. But why that resonates with me is a piece that I wrote a little while ago, which is basically said, I hope our new overlords are wise, because I genuinely believe that this X system asset class we've created, and primarily Bitcoin, but really the whole thing still at the moment, is a foundational bet against the institutions that we've created that got us here.
Yeah.
It is a bet that we are going to collapse, not necessarily like, people, like you said, not back to the Stone Age, but that enough of what we have got, what we've relied on to get us here will collapse, that people will take their shiny rocks and they move them to an island somewhere to return to the land once it has settled down. And I understand that as a response. My reaction to that is, even if I had 95% certainty that that was the way the world was going to go, I still don't think I could morally, personally make that bet. Because I think that is a bet not so much against the house. I think it's a bet against America. I think it's a bet against Western democratic capitalism. Because in the scenario where Bitcoin is $1 million a coin, you have to ask yourself, what is the implication for every other asset class in the world? Like, can you imagine a world where we get another 10x on Bitcoin? And yeah, that was followed right along by the S&P 500. Absolutely not. It's insane, right? There's just not enough capital in the world to do that, literally. So for the aggressive bull cases of this shiny rocks on the island Bitcoiners to come to fruition, you have to be cheering for the collapse of the dollar. You have to be cheering for the collapse of the US real estate market. You have to be cheering, frankly, for a global recession, because those are the environments in which the Bitcoiners will be right. Some of that's already happened, and it hasn't just happened in Bitcoin. I mean, just look at who ended up in the cabinet, right? It's, the wealthiest cabinet that we've ever had in the history of the country in any way you can possibly measure it. We've taken the richest people in the world and we have put them in charge of all of the organs of power. Okay, well, in some sense, you can bet with them because they're probably not going to let it go down. You can bet with the Bitcoiners because they're sort of the counterplay as well. In none of those cases does it feel particularly great. Does it feel like you're actually doing something that is pro-human flourishing? And in that environment, yeah, I say bet with the house. I think you can't ignore crypto. I have a very small allocation myself, like 1 or 2% of my portfolio. To some extent, the more this becomes taken over by Wall Street, which it's very clearly, it's very much Bitcoin TM now. I mean, it is a product that is owned by the street. With Coinbase entering the S&P 500, I feel like all bets are off. So you're going to end up with the exposure whether you want it or not. And if crypto goes, Bitcoin goes to 1 million, guess what? Coinbase probably ends up being the biggest holding in the S&P 500. So every investor is going to have some exposure to it anyway. That actually makes me feel better in a sort of bad way. I mean, it makes me feel better in the sort of taking off shoes that are too tight way, but not like in a fixing the damage way. But I think there's real problems there, because if you think about most of the people who are going to get the wealthiest on a delta basis on crypto, it's the people who've been in since the very beginning, who almost by definition were very counter to the current system.
Yeah, very anti-system. It is the mainstreaming of anti-institutionalism in a way, and it does feel, anti-American as a result. And to your point, you really forced me to think long and hard about this, not that it has impacted decision-making in a big way, but just to reflect on it is always important. My version of it, which is very consistent with your, because it was informed by your version of it is kind of the ultimate societal catastrophe hedge. And so to go from like the thing kind of creeps up on just societal erosion to the thing just kind of zooms up overnight, my version of it, and it's a mental picture, right, is, hey, if we come under a direct nuclear attack as a nation, and it is very clear that we're just not capable of kind of pushing the right buttons to make it go away, it would be an understandable next step that everybody in the world says, sell everything that is tied to the economic system as it exists. And like, oh, what do I do with this thing? Well, why don't I just put it on the spaceship? It is very much a spaceship outcome where it rises on the back of just kind of the system collapsing, which doesn't feel great. It's the role gold played for the last 1,000 years. I mean, I think the digital gold argument is a very real one psychologically. Yeah. I think it does fill that. And look, I've talked to a lot of investors for whom their exposure to crypto has come from, well, I've always had 5% in gold because you never know when the world's going to end. Now I have 2.5% in gold and 2.5% in Bitcoin. I've talked to countless investors who have just slotted Bitcoin into their societal collapse bucket. It's hard to argue with. I think real estate's probably a better bet long-term. Go buy some farmland in Canada, but at least you can make food out of that. Right. No, that's right. I do want to talk a little bit, and again, I don't want it to be overly doomsday, though maybe it is the place that we're visiting at this moment. I really do think a lot of good has come out of the kind of ETF revolution and all of that, where for a long time, because it was somewhat limited to the core and bore, whatever Jack Bogle described it as, just, boring is good. It did allow you to kind of co-invest, to participate without inflicting a lot of self-harm. And in a lot of ways, a good way of putting it, right? And you have this great framework about kind of a white hat, black hat, concept to think about how the ground is shifting in a lot of ways. But, again, the ETF world is changing rapidly. Forget the beginning of, the 2.0 revolution. We're deep in the 2.0 revolution right now. And some stuff's going to be good and some stuff's going to be god awful. How do you kind of make sense of, and I'm not asking you to name names, but like, as someone who's staring at it, how do you go this bucket, that bucket? I think it's pretty straightforward. The sort of black hat, white hat framing, just to be very clear, the reason I'm not saying good, bad, and I'm saying black hat, white hat is because if you go back to those spy versus spy comics, the white hat spy and the black hat spy were both doing horrific things to each other. Like, nobody had the moral high ground. You were just expected to know as the reader that the white hats were the good guys, that they were the ones who were on your side. So whatever they were doing to the black hat spy must be justified. And so you could laugh along with that. I think that's kind of what the ETF market is. I don't think there's anybody particularly pure as the driven snow out there, not even Vanguard. I really don't. I do think you have to ask the question, both
who do you trust as an organization? I think that's a really important question that most advisors don't think about and most investors don't think about. Not in the trust sense of like, well, are they going to turn into Bernie Madoff and run off with my money? I mean it at a much more granular level. Like, and I'll give you a really specific example. You're an advisor, you've got your clients in XYZ ETF, and you see that it printed down 5% today, but the index it's tracking was flat. Okay. You might be like, oh, I'll call my wholesaler, right? Or I'll go to my advisor portal and website. The question is, what organization do you think is more likely to try to solve that problem because their business is making sure they solve the problems for their clients versus an organization that's going to be like, oh crap, we screwed up. Put up the walls. We'll do a reprint next week. We'll send out a press release tomorrow. I've seen both reactions from firms. Like I've seen both exact reactions. I've seen folks lean real hard into outreach and transparency and acknowledging that they've screwed stuff up. And I've seen firms just deny. Oh yeah, we fixed it. Be quiet. Right? So that's the kind of trust I'm talking about, is that kind of direct interpersonal trust that doesn't have anything to do with the contract you signed and has to do with your feeling about that relationship. The reason I say that's super important is because we're in the middle of the collapse of rule of law. There is nobody who is going to come save you when you have a hiccup with BlackRock, State Street, Vanguard, whoever it is. That is going to be between you and them. The SEC is not going to step in, and you may be in the right, but unless you're willing to go to court for every problem you have, the contract's not going to matter. The relationship's going to matter. That feels more true now than it ever has in my career. So when I talk about a white hat firm or a white hat product, it's not just like you're not going to get burned on this product. It's when something bad happens, they will be looking after you, as opposed to you chasing down them. So when I look at products and things like that, I think there's some very obvious things like, oh, this is a product that is charging 1.3%. In the modern world, we could say that's pretty clearly going to be on the black hat side of things because there's almost no investment service that is worth over 1% in a publicly traded vehicle. So almost by definition, they're not on your side because they're clearly taking all the rake off the table they can possibly get away with.
Extracting as much rent as possible.
Sign. Exactly. So I think, things like cost, things like structure do matter. I actually look more at things like transparency and education. And I'm happy to name names here. Private credit, we're talking a ton about it. We've got 2 viable products on the market now from major ETF issuers. We have State Street with a product called Priv, which has been a nightmare of non-disclosure, bad data. They never put anything out accurately on their own website without having to correct it later. They don't respond to phone calls. They've been absolutely trouncing through the industry trying to get everybody to not say anything bad about them. On the other side, we've got Capital Group and KKR trying to put the same kind of private credit that we all probably don't need to own into a product. But in their case, they're deliberately putting it in a liquidity limited vehicle, the interval fund. They've launched a whole website educating people about what that means. They're doing webinar. I mean, they're being very forthright, and they're also not charging very much. They're not charging 2% for it. So I think it's not that hard to make those distinctions. The problem is the industry's very good at selling you things. The ETF industry has gotten very, very good at it. And so the promises look ridiculous. 85% yields, weekly payout of 5%, all these manufactured things that seem too good to be true. You don't even have to look at the math to decide whether they're too good to be true. Just ask yourself, does it seem like they're on my side or not?
Yeah, that makes sense.
And most of the time, it's pretty easy.
I think that's exactly right. And, it's a theme that carries through all these conversations I'm having, where knowing that someone actually cares, that's not anything that can be inscribed in law or even in a rule book. It's just a cultural thing. And, weirdly, that's what you have to rely on in a lot of cases, which I wish morality had been more evenly distributed across our population. But to the extent that it's one thing that we can kind of identify markers for, at least we have that to go for us. All right, I want to take a step back here. How did you get here? What was young Dave Nadig doing in the mid 80s with your latchkey and your...
I grew up fairly poor, son of a mostly unemployed English teacher, and a mom who filled in the gaps where she could, and was attracted to the idea of money and stability and to some extent a conservatism, but I don't mean that in the way we would mean that at all now. I mean it in the 1980s context of conservatism, like Michael J. Fox wearing a suit at the age of 17. I mean, I wasn't literally doing that, but I had hippie parents, and their counterculture was the one I was pushing against.
Yeah.
So I wanted to learn about politics. I wanted to learn about money. I wanted to learn about science because my parents just wanted to talk about music and poetry, which I'm very grateful for now, but at the time, bridle.
Into the system.
Yeah, exactly. I left home very early. I was in college at 15. And my 1980s college experience was mostly listless. I didn't really have much of a direction. I'm grateful that I had a very dirt standard kind of great books, liberal arts kind of education because I was an English major. And that's sort of what you got at a public university back in the 80s when you were an English major. And then even before I graduated, moved to Hollywood and I was going to write. That was what I was going to write, the Great American Screenplay. I wrote the Great American First Page. And then ended up getting sucked into, believe it or not, the finance side of the television industry. I was running payroll and stuff at the age of like 20 for some bunch of small things because I could use computers. 1987, that was a major skill that I could like hop onto a Unix machine and I knew how to run spreadsheets on compact machines. And it was a real skill. And so I just sort of parlayed that, which had nothing to do with my education, into being in the sort of money side of Hollywood. And then very quickly realized how over my head I was, and then started applying to business school and realized that somehow that was going to be it. And so I ended up at BU in the BU MBA program, studying with Vibodi, among others, which was a phenomenally great experience. I'm a very proud alumni of that program. It absolutely changed my life. And before I even got out of that program, I'd started a consulting business, which is now Cerulli Associates, which most people would know from their work. But we started that in 1990. While I was still getting my degree, and then went straight from there into Wells Fargo Nico, which was the progenitor firm for what is now BlackRock,
right?
Building their first ETFs. My actual first gig was working on target date funds. So I was selling and marketing and helping build the first LifePath target date funds and then selling those to 401k providers.
Wow.
And then by the mid 90s, I was on their ETF team because that was actually a thing. So that was sort of my ramp up there. So it was good tutelage. I was very grateful for the timing of it, like getting your MBA in like 91 or 92, whatever it was a great time to get minted as an MBA and then get hired in San Francisco by a bunch of quants at Barra. Right? I mean, It was a great time.
I mean, there's so much there. We'll have to revisit again. Just the concept of a target date fund, which for a lot of people are just mysterious, even though, they've become...
And pros, like everything else in my career, passive investing, which has been most of my career, target date funds, all of them have unintentional consequences. None of them are just an unadulterated good. They've all had weird impacts.
Yeah.
And, that's how markets work.
I mean, target date funds being a perfect example of a great compromise. They're good for nobody, but they're awful for very few people type of thing.
I will tell you, as somebody who was selling those things in 92, I was going into 401k plans and looking at like where the invested assets were. And almost every plan we looked at was, well, 50% of the people are in cash and 50% of the people are 100% in aggressive growth equity.
Yeah.
And nobody had anything. There was nothing in the middle. And most of it was in cash. I mean, every time we would go to some 400-person firm, it would be like, oh, yeah, we have 75% enrollment. What are they all in?
In a reserve fund.
All of it's cash.
Yeah, totally. I mean,
where they're getting charged 75 basis points.
No, totally. I mean, again, Tzvi and I wrote a piece about target date funds, and the concept was, and it was kind of a play on a famous Einstein concept, making things as simple as possible, but no simpler. And that's what I meant. I meant it as they're not optimal for anybody, but they're so radically less awful than a lot of things you can do for yourself.
Yeah. I mean, I think you could say the same thing about most indexes that they're constructed. Like, I think the S&P 500 is a reasonable but not particularly great take on investing in large cap equity in the US.
Yeah.
I think there are better ways to do it. Like, I don't think you need a committee. I don't like the way they ban things. I mean, again, not perfect, but probably better than most alternatives.
Yeah. And to your point, I mean, talk about a big business and huge branding, right? When you think of what it's supposed to represent, does it make any sense that someone has a branded monopoly, a perceived monopoly on large cap representation in America and is extracting rent as a result? okay, I don't think that's ideal. On the other hand, to the extent that it's a marker for whatever you described it earlier, some version of trust, some version of this is an institution, it's all so gray.
And also we get trapped in this in the economy all the time. There was a reason why you wanted somebody like Standard & Poor's standing behind your index calculations, because in the 90s, they were hard. Like just keeping track of corporate actions was hard. There was no instantaneous source of truth that would tell you that XYZ split on Tuesday and it was 5 for 1, not 4 for 1. Like actually just keeping track of all that garbage used to be a nightmare. Everybody thinks now it's just, it's a spreadsheet, push a button. I will tell you, the businesses of MSCI and Standard & Poor's were built on it not being pushing a button.
And hard work of sorting out details under a lot of pressure, for sure.
And now, to your point, now really not. Right? A company like Medify has a handful of people and can produce thousands of indexes a day. Yeah, any of these guys.
We do live in a world of gray, in a world in which as technology evolves, there are winners and losers. If you've been on the right side of things, then you're going to push back and you're going to try to maintain your upper hand and your cartel power, your monopoly power, as long as you can. Even though it may no longer be economically warranted. All right, on the way out, I like to ask my guests a series of questions that is derived from a famous literary show on French TV by Bernard Pivot. So are you ready for some questions?
I'm ready for my French questions as long as you ask them in English.
You got it. What is your favorite word?
Can we, how family safe is the show?
Have at it.
Motherfucker is real hard to beat. Sorry, it really is. I'd love to say something like love, but honestly, it's one of the best words in the English language.
Pretty great. Well, I guess we also just answered question number 6, which was going to be, what's your favorite curse word?
Okay, that's so. Sorry, beat got too far.
I love it. Oh.
And the thing is, I don't generally swear in public at all. Like this is the first time I'm probably the first time I'm on video swearing in 20 years.
Well, they had to be a first. I love it. And I'm grateful that it would be the selected party. What's your least favorite word?
No. I know it's sort of a pat answer, but that's a big one.
Yeah.
I'm a big yes and person.
I was going to say yes and. Seems like a much better version of moving forward.
Yeah.
What's your favorite drug?
Ooh. Like the one I couldn't give up is caffeine. For sure. I mean, I've certainly had my exposure to plenty of other of them, but I don't think I could go a week without coffee.
What sound or noise do you love?
Babies laughing. Oh my gosh. Little kids, when they like get uncontrollable, like particularly little babies, like you tickle them in the belly. There's nothing like that sound.
You couldn't have gone with that like as part of your favorite word. You had to go with, what sound or noise do you hate?
Like lawnmowers, leaf blowers, anything that somebody, like I live pretty much in the middle of nowhere, but if over there they start with the lawnmower or the leaf blower at 7:00 at night on a beautiful Friday night, hate it. That's out. The worst.
Well, we covered your curse word, unless you want to revisit.
No, that's a good one.
Who would you like to see on a new banknote? Talk about institutionalism, right?
New banknote. So it's probably got to be I think I have to limit that to an American, probably. It seemed fair. Oh gosh, that's a tough one. I don't have a lot of hero worship. I mean, I'd take Jack Bogle.
I was going to say Jack Bogle for the singular.
You could do worse.
No, for the singular reason, as you and I were discussing the evolution of asset management over the last, 70 years or so, I think he's probably saved American investors more money than just about any other human.
Yeah, I think there's a lot that gets told about his story that is questionable. I encourage people to read Eric Balchunas's book, The Bogle Effect, and get a little bit better balance on the mythology of Jack Bogle. Right. But I think you're right. I think he's done more for the individual investor than anybody in my lifetime.
What profession other than your own would you not want to attempt?
Computer science. Like, as much as I love playing around in code and stuff, if I had to do that every day, I think I'd lose my mind. The levels of abstraction would get to me.
Yeah. If you were reincarnated as a plant or an animal, what would it be?
Oh, a rabbit. I have no question at all. I've had some sort of weird spiritual connection to New England rabbits my whole life.
Because you would just want to be chasing down trails, or just they speak to you?
No, there's a whole rabbit warren at the base of my property here, and they sit in the lawn while I meditate every day. And they're just the most chill animals in the world. They just can't be. They're largely solitary. They're not big communal animals, which is very much me. They do play, right? So they're not solo animals. They're not solitary animals. They don't just come together to mate, but they just kind of do their own thing. And they spend an awful lot of time in stillness. So it just feels very me.
Well, one last question, and then we can return to our stillness state. If heaven exists, what would you like to hear God say when you arrive at the pearly gates?
Welcome. Just that. Just welcome.
Well, Dave Nadig, this was an incredible conversation. I am so grateful to you.
Yeah. Same, man. Thank you very much.
All right, bye.
This podcast is for entertainment and education only. Nothing here is financial advice. Treussard Capital Management is a registered investment advisor. Please visit our website, .treussard.com, for additional information and disclaimers.